With nearly 1 billion people expected to enter the crypto market by 2030, one of the biggest obstacles holding back mass adoption long term is interoperability, like being able to work across different blockchains, because ultimately long term people don't care if they're on Ethereum, if they're on Solana, if they're on Cardano, if they're on Avalanche. People don't care. They just want to be able to work seamlessly with crypto, with blockchain technology, and they don't care what blockchain it's on. They want to be able to, use the different decentralized applications, be able to, use all these different products and services built on the blockchain and using blockchain technology, but they don't care about all of the underlying features. This is where Omnichain comes into place, and recently I invested in a project that is all about Omnichain, all about working across different blockchains, and it's called Layer3. Layer3 doesn't have a token just yet, and it's set to launch one pretty soon. They talk about this over on their X page, like L3. They say the protocol governance and utility token launching this summer, but again, they haven't launched a token just yet, and what they're doing is they're trying to have tokenized attention for the Omnichain future. It's tapping into RWA, it's tapping into Omnichain. It's tapping into all these different things that are really hot in the crypto space right now, and ultimately, like BlackRock and major institutions are excited about as well. So if you're looking at their Layer3 foundation, the foundation is what helps foster community-led growth for the Layer3 ecosystem. And if you're looking at Layer3, you're looking at their website, some of the things that are so impressive about it is that, like I said, they don't have a token just yet, but despite this, they have nearly 1 million users. They're trusted by 1 million users in a $100 billion ecosystem. So you can see 1 million plus active users, 25 blockchains, 10 million plus credentials, 40 million plus completions. And if you're looking at this, they already have, usable products for users and for ecosystems. If we go ahead and click on Open App, you can see all these different things, which I recently made an account on. You could see how they have a number of different opportunities to get some rewards and benefit other projects in their ecosystem. And you can see all the things right here from their daily offers and the ecosystems and the number of quests, and we'll go over all of this in a minute, but this is something that is so impressive, and one of the reasons why I think this project is something you need to be keeping an eye out on. If we go ahead and looking at some of their details, you can look at their white paper. It has overview, tokenomics, Layer3 protocols, governance, and audits. We're looking at the overview. It says, look, the primary objective of Layer3 Foundation is to foster the community-led governance over Layer3 protocols and support the development and adoption of the Layer3 ecosystem. So if we're looking at this, some things in terms of their tokenomics are pretty impressive and exciting. This is what I'm really excited about, is with their tokenomics, because Layer3's distribution network has a powerful flywheel effect. So as more ecosystems ultimately integrate Layer3, user demand increases. And as user demand increases, this is going to drive ecosystem integration and amplifying value. So it has this flywheel effect that ultimately long-term is going to create a ton of value for their token when they do launch, and help bring more and more people onto their ecosystem and help them, explode in user base. Because right now they're at 1 million, which is impressive. But as they start to see people and more companies and more projects and more ecosystems use Layer3, well, this is going to be very, very beneficial for their token and for the overall value. If we're looking at some other things, the tokenomics for L3 are based on 3 principles: a total supply of 3.33 billion L3 tokens, 2 burn mechanisms, and 1 unified staking mechanism with 3 layers of rewards, which is something that is pretty unique. It's called layered staking. So with this, you can have a number of different ways to earn money with their staking. So the layer 1 is passive staking rewards and governance. This is just like any other staking mechanism you've ever seen, where there's passive earnings. You could stake L3 tokens to passively earn additional L3. The governance participation, you can participate in governance decisions, and governance processes are detailed. All of you click right here. Then layer 2, this is an additional layer of earning rewards from staking. So layer 2 is actively earn other tokens and increase protocol utility. So it says, look, stake to earn exclusive quests. By staking a certain amount of L3 tokens, users gain access to exclusive quests and incentives run by Layer3 and its partners. Tiered reward system unlock different levels of rewards and experiences based on the amount of L3 token stake. Launchpad access, you'll receive early and extended access to new launches and new airdrop campaigns and extra races. This is just an additional incentive program. Then the Layer 3, this is something that is really a game changer, because with Layer 3, it says actively earn L3 tokens, so activity-based airdrop multipliers. So with this, you are able to earn a multiplier on L3 airdrops based on your activity. For example, a whale who does nothing gets proportionately less than a minnow who does a lot. A user who completes 10 quests might earn 1.5 multiplier on their L3 rewards, while a user completing 20 quests would earn a 2x multiplier. So ultimately, by doing this, your staking and activity levels are measurable indicators. Can help you earn more rewards, and this is something that is completely unique for any type of staking, where you have traditional staking where you could benefit just like any other token. They have that Layer 2 feature where you can get other tokens and increase protocol utility, and then they have that third layer to it, which you can actively earn L3 by simply doing more on the network and participating more in the ecosystem. This helps you earn more. That's ultimately why it's called Layer 3. There's 3 different levels to that staking. Now let's talk about their burn mechanisms, because they have 2 important burn mechanisms. The first is that communities must buy and burn L3 tokens to access the Layer 3 protocol and network, to post quests, deploy incentives, and access Cube credentials. Cube credentials are a unique digital identifier that verify a user's Omnichain participation and achievements. They're used to target specific users and incentives. That's the first burn mechanism. So this is something that is so important, because as more and more communities want to, be a part of the ecosystem, offer benefits to their users, and have these different quests and incentives, they need to buy and burn L3 tokens. And then the other one, which is really important as well, is that users can also buy L3 tokens to access perks across the partner ecosystems, including early access, fee discounts, exclusive NFTs, and a lot more. So those are the 2 very important burn mechanisms. And the last thing is going to be with the distribution. So one thing I really like about the distribution, which I highlighted right here, is that 51% of total L3 supply is reserved for the community over a 4-year period, with 40% in year 1, 30% in year 2, 20% in year 3, and 10% in year 4. And ultimately, this is so important because it shows that it's very much a community-driven project. This is key because they're reserving more than half the tokens for the community. You can see that 25.3% is for core contributors, 23.2% is for investors, advisors is 0.5%, and you can see that this is a pretty exciting token breakdown, at least in my opinion, because it's really rewarding contributors and community, and not so much just the team. Yes, the team and investors have a good portion, but it's not like they have a majority of the supply where they're just going to dump it on users. This is something that you really like to see, that it's a community-oriented project. So with their airdrop and future incentives, they already have some plans, but not everything rolled out just yet. Airdrop 1 and 2 will distribute 250 million tokens to early users, community members, and participants in S1 and S2. And they have, the remaining allocation, 43.5% of L3, will be distributed to the Layer 3 community via layered staking and future token distributions, which is going to be on a schedule decided by the foundation. So ultimately, with this project, there's really just so much to like. They are really redefining Omnichain and what it means to be able to work across different blockchains. They're really redefining, being able to have staking with multiple layers to it and multiple benefits. And you could see that they've already partnered with some of the biggest names in the space. Like I said, Uniswap, Phantom, Base, DYDX, the list goes on. And they've already been able to attract million-plus users without even launching a token. So if you're looking at some of the things they've been doing, you can see they always are talking about things over on their X account. You can see Layer 3 Foundation posted about the new changes with the total supply in terms of their airdrop. You could see that they also talked about airdrop and milestones, what it's going to mean moving forward, how to be a part of it, and they talk about examples with it. They also post about how they recently secured $21 million in total funding by some of the names we mentioned earlier, like Parify Capital. And these are some things that just really show how much institutions and big investors believe in this project and really what they're doing for the entire space.